Can you see my screen?
Yeah.
Can you see my cursor moving?
Yeah.
Okay. So, what we're looking at here is the 4-hour chart of the Nasdaq as stated within the previous session. I have highlighted the fact that I would want to see the Nasdaq reach as high as creating an immediate rebalance in terms of the daily chart, which is exactly what we are seeing right now. What I anticipate from this PM session is if we are going to continue lower, then based on this current chart that we're looking at right now on the daily chart, as you can see, we have a low in place, a current low in place, which is the thing that I have targeted within, or the level that I have targeted within that execution that you saw me do on a long on the PM session. So this is the same thing. This is the current in place low. If I anticipate the market to go lower, then I would want that to be taken, which is a low that has been formed right now in a previous session. I believe that is the AM session low. And if we go beyond it, then I aim for, instead of the 4-hour, this level of liquidity, which means that we're going to go after or at the consequent encouragement of the tail if the market is willing to do that. And this also correlates with the daily chart upper quadrant of this big tail. And of course, this is a big volume imbalance, and you can see that it is not a gap, but it is the difference between this candlestick's opening, this candlestick's closing, and this candlestick's opening. This is the gap. 50% would be around here. We have closed below it. We can use it as a means of resistance towards this level. And based on the 4-hour chart, if I am indeed correct, and I don't know the probability of this scenario occurring because I still believe that the market is not going to be very one-sided throughout this PM session, but if it is, then I want to see the market, number one, use this inversion gap as an inversion gap if we close above it within the 10 o'clock to 14, and also the lower quadrant or the consequent encouragement of this tail, which means that this candlestick has to close the 10 o'clock to 14. And when does a new candlestick open? At 14 to 18, essentially. So my scenario, based on this exact statement, is going to occur once we open at 14. So I'm going to wait for that opening, and of course the same, or the 1350 to 1410 macro time period is going to be likely to form the high of said candlestick and to go lower into this if we're going to expand lower indeed. So my aim for this session, based on the fact that we took a previous session high, we went and created the daily immediate rebalance. If we are indeed correct, then we should go as high as the consequent encouragement of this tail, use it as a means of resistance if it's willing to do so. If it's not, then this is a sign of weakness. And I aim for the consequent encouragement of this tail, of course the upper quadrant, which is also the weekly future inversion mean threshold of a weekly order block or weekly order block. And if the market goes below that, we're going to aim for this and the consequent encouragement of this tail. So what I mean is I want the session to not go above this and not go above this. And once the market opens and goes back into these levels, what I'm going to do is I'm going to seek some shorting opportunity if it is going to show that, and I'm going to target this if it doesn't do it right now. But again, I am very cautious in terms of, number one, influencing your opinion if you've had another opinion, which again creates codependency. And I don't want you to be codependent on me for your opinion, but at the same time, I'm very cautious of a likely consolidation scenario, as I don't believe this current day is going to take out the low we have in place. I would want it to be tomorrow or the following day. But this is my current ongoing scenario for the PM session. Let me just zoom out on this. Okay. 1250, 1310. As stated, we've had launch consolidation here beautifully above this high and this high, whereas my money accumulates. Created a market structure shift here, went back, used this auto block here, and let me just see. Because we went into the 50% of this auto block here, next time, if we're bearish, then if we're going to see this low, we're going to see the market going to 25%. And if it's going to do that, then we're going to attack the low and this low and this low. And this, if we're bullish, should not fail. And it has done so. Breakaway gap. This, I would favor the market. I mean, the market can go back into it because it correlates with our level that we're expecting on the daily and also on the 4-hour. But if we see a return back into this, which would mean that the market is also going to take on this high and this high, which would be the part of the lunch session, because our PM session starts right now at 13:30. If the market is willing to go up into that, which if we are weak, we should not see, but if the market is willing to go back into that, we could potentially see the market retracing, anticipating an intermediate term high to form here, and then ultimately taking on the low that is created here. And if this right here stands as a swing low, then this engineers this level of sell side. We can take the BT levels between this and aim for something inside of them or beyond this level of sell side if the market is not going to consolidate within this session. And if we are going to move rapidly, then the consequent encouragement of this big breaker tail or the lower quadrant should resist price going higher, and eventually we are going to see some form of a previous PM session sell side liquidity being taken prior to our macro, and we can just trade the daily closing, which would be bullish in this case because we've had the market retracing. So instead of the last hour trading, we can seek some form of buy side. So basically, for my bearish narrative, if the market goes back into this, I anticipate an intermediate term high, lower if the market goes here first. I would take something bullishly in a daily closing perspective based on the AMD. We have also closed below the new day opening gap, which can be used as a means of resistance. But I mean, we have a pretty efficient delivery here. But if the market goes back into this, of course, we can use this later on as a means of resistance. But I would favor this as a return or as a retracement because we've created a reversal. We can expect a retracement, then a continuation. So that's my premise for a bearish narrative. And also, the reason why I expect again a retracement is because we've taken on this low, so we can potentially see the market retracing. That's the reason why I expect this and not just some expansional signature, which if I was trading here, I would not expect any retracement because we went below this low. I now can see a potential premium run, short-lived, so we can get back into this. So I'm looking at the lower quadrant of this. Here. Constant encouragement. Again, you can see how the market went back into it. If we were trading inside of this candlestick, then on our next 15-minute candlestick, we would anticipate the market not to go back here if we are weak. And because we are also trading from this high to this low, from the initial point to the target, we're trading inside of the last 25% where we do not want to see big retracement. Then we could anticipate this to be left open. And because we went here, the next time we're going to go there, it's going to happen what? The market is going to expand lower its speed. Let me let this level here. I like the fact that we did not touch the 0.5 here. And it also correlates, if you're looking from this low to this low, around the 25%. No, sorry, from this low, I was looking at this. From this low to this low, the 50% BT. And I also like this one here, the -1. And for this, again, deviating the breaker and the range, we can see the approximate same levels as a standard deviation. And we also closed below the 0.5. Let's see what the market is willing to do right now. And for you to see what I have anchored based on a weekly, 50% of this here. If I anticipate the week to be lower with speed to take on the low, I would want to see it close below it. So by Friday, we should be trading here below the mean threshold or even below the lower quadrant. If this week fails to do so, then the next week, which is also the new month opening, should open, use some form of resistance towards or from the 50% of this, which also correlates with this inversion gap. If we're aiming for something lower, it should create the high of the week very fast because we're an expanding market if we're looking for this and if we're correct, which means based on a monthly chart, then or from a monthly chart based on a weekly chart, that the first week, which is the NFP week, and that's why we trade Monday on an NFP week, that the next week should open, should go higher, create the high of the week very fast, and then distribute lower within Monday, within the first day of the month. So if you're looking for understanding why we're trading Monday on an NFP week, which is the first week of the month, then this is one of these examples. Or if you're using just a standard, or this is what I want you to do, just a standard weekly chart, then you can also correlate this with the fact that we've closed below this mean threshold. So we're going to open, use that, and rush, quote unquote, lower below these lows. We're going to go lower its speed because we're very close to them. In this here, level of buy side being taken, if we're looking for a reversal in terms of the algorithmic phases, then what does my eye look for? The opposing liquidity pool. This is why I told you to pair the algorithmic phases with a PD array. Because if I'm looking for the market to expand towards this low, then I'm looking for an order block. But this is going to be my target. So a reversal, which is going to be created as an expansion. So I'm going to look for an order block to deliver said premise. So reversal, liquidity, my eye jumps to this, and for my PD array, my eye jumps to this bearish order block if I was not looking for this. So you can see how it beautifully correlates. If I was looking for a retracement, I would look for some form of fair value gap and a continuation again, an order block. 15. %25% of this as stated. And also that level that I was showing to you on a weekly, I've used it as a means of resistance, and let's see if the market wants to deliver lower right now. And the reason why I've chosen the 25% and not the 50%, which you can see that we fell short of, is because we've had delivered already inside of this. So we have delivered sell side, buy side, again for the market to close here, market open, delivered buy side, sell side again, and there is no need for repricing back into this candlestick's low at the consequent encouragement of this, because we have already done the work. So that's why I was looking for the 25%, which would also mean that we are weak. And we can also see here how the midnight opening price in itself can be used as a means of resistance. So in terms of the AMD, manipulation has been created inside of the AM and lunch. We can see a lunch distribution beautifully into the PM session. So in terms of a PM session characteristic that I want to share with you is, if I was a PM session trader and I would see this, and I was a PM session oriented trader before in 23, if I was a PM session oriented trader and I would see that this movement has already expired before we are even looking at the macro, then I would just wait for the last hour trading obvious scenario, obvious buy side or sell side, in this case buy side, to occur, and I would filter out the 1354 in 10 in terms of trying to trade lower and trying to chase this run lower if I was to trade a PM session, just for your insight. But a scenario in which the PM session is not going to deliver that is if, let me just draw this out for you. So imagine this is a daily candlestick. If we do not anticipate the market to form a big wick here, if we anticipate the market to just run and close below PDRA and start an expansion on a daily chart, and if we do not anticipate any type of a wick here, if we anticipate the market to just close and never form a wick, then that last hour trading scenario will not occur, because the market, and this will happen. Let me just give an example again. This is exactly what I'm talking about here. So when we're expanding lower and we're expanding lower with speed, this will close, market opens, and it is just going to continue lower. So when we have one directional movement, easy to see or very fast runs that are going to occur within the week, if this occurs, then the next day is going to open and just continue lower. So if this instance occurs, then the last hour trading will not materialize. It is just going to continue lower and continue driving lower. Let me just see where the day is currently trading. If the market is willing to go back into the constant encouragement of this right now instead of this session, then I believe that today's candlestick, today's PM session is going to take on this low. And if it's going to take on this low, then it's going to take on this one. And perhaps we're going to have a big expanding lower PM session. Because the market, as I've explained, had already done the work to come into this busy here. So if the market retraces back into it and it goes back into it, then we're going to take on this, and if we take on this, we're going to go lower speed. So be mindful of that. And also we fell short of the consequent encouragement of this, so this might be a sign of weakness. So instead of this macro, we can, if I am correct, then we can expand lower, and we're going to take on this low with speed. And if we are going to proceed into that, then this will be our main point of wanting to see resistance on a 1 minute chart. So if the market closes below the 75% or below the consequent encouragement of this, if that scenario is viable, then I'm going to go into a 1 minute chart between this exact macro or the next one. 1 minute market structure shift, then I'm going to seek something lower, knowing that this is going to stay open. This is a shift, this is a breakaway gap. And this beautiful signature here. So sell side below this low, and if we take this, we're going to take it with speed. Let me switch to 1 minute, see what market structure we have right here. $150 macro started. Switch to 1 hour, see how this looks. Okay. If I'm correct within my narrative, these highs, which you can see as relative equal highs, I believe they are going to stay in place. I believe that this should be seen as an intermediate term high, correlated with the fact that we fell short of that new day opening gap consequent encouragement. So what I want to see the market perform is a buy stop rate here. Instead of this auto block, we would have the first, second, and the third correlated with this CB. So if the market goes above this, then this is the highest point in which I would want to see the price go. It also correlates with our intermediate term high narrative. So the repeated raise, you can also see the logic. So this is our dealing range. I'm waiting for a premium run right now. If it does so, then this would be labeled as a market structure shift if we go below it. If the market forms a swing low here, this is the low that has sent price higher above this buy stop rate, if it is willing to do so. And your entry in that scenario would have been constituted after we created the market structure shift. And I would use this with my own entry or this one as an inversion gap prior to the macro or within the macro right now. But let's see what the market is willing to do. And I was looking at the 1 hour chart here, and the scenario that I have explained in the daily chart with the market closing on the low, because we have a big expansion, can also happen, which means that the 14 o'clock candlestick will open high with, it will create the high with velocity, and then we can continue lower, which can mean that we can take an execution very fast in terms of the macro. So in this exact macro, because the market will open higher, lower, if I am correct. So I'm looking at this inversion gap now. I do not like the idea of shorting in such a deep discount, but with this current narrative in place, I would do it if I'm correct, but it is a very risky approach and I do not like to do this, but I will do it for the sake of presentation. Give me 1 second. Execution 150, 210. I will take this as a shift. We've had the market coming back into the order block. Point of concern is this here, this high here. I'm looking at whether the market wants to use this constant encouragement of the tail. This should be an immediate rebalance, which is also the inversion gap low. Let me zoom out a little. And this would be my target. Let me see what liquidity we have ongoing there. This is also one of my targets. We have a lunch session sell side from Tuesday. And we also have a still inefficient part of a busy. So this is a normal busy. We have sell side delivery here. So the only part that is inefficient is this one. Inefficient in sell side delivery, of course. So we should deliver back into it, which also correlates with the consequent encouragement in the lower quadrant of this 1 hour inversion gap. If I'm not mistaken, it was an hourly or 15. So we should not see this high being taken now, if we're correct. And we're about to reach that target. And I might have missed that particular entry here. But we closed below the upper quadrant with speed. We fell short right now of the consequent encouragement. So the next time the market opens and it goes there, I would want to see it run through it with speed and go directly to the lower quadrant. This would give me speed exactly like this. Yep. So you see right now how important is the narrative that is lying within the hourly, the 4-hour, and the daily chart. Because I have stated the underlying environment, only one, and we can see the lower quadrant right now. Because I've stated the fact that, okay, the market is going to close, or I want to see the market expand lower with speed and close on the low and open the next 14 candlestick and go even lower with speed. Normally, if I would see this inside of my AM session, then I would not even think about taking a trade within this deep discount that we're trading on. But because I anticipate the market to displace lower with speed from this price point here, then this could have been taken as a beautiful entry, as my entry prior to the 150, 210 shift, or even after the shift here. And this is also your entry here, if you were to take an expansional order block entry. If not, again, this one, but this is not a retracement. This is still an expansion order block entry, which is just an order block that is created when we anticipate the market to expand lower. So not on a retracement idea, but when the market has finished the retracement and we anticipate the expansion to run, This is when I correlate the expansion with the order block, which means that every singular up close candlestick should resist price going higher. That's why I would use these order blocks, not a retracement back into this. And we also fell short of that SIBI here. That's a sign of weakness and a sign of strength within our idea. How many points is this? I'll be content with 57 points to 24. I would be content with this 1 to 2 position. And it was very logical too. And what I have stated prior when I was talking about visualizing the higher time frame chart on a lower time frame chart is we're currently trading at 1359 time period. So what I'm seeing right now as a retracement, what I do is I internalize it as the 1 hour AMD. Like the 1 hour candlestick is about to close. So I do not see this as a retracement that is a threat to my idea. I just see this as the normal AMD, which opens higher, lower, and we are doing this right now. For the market to open, go a little bit higher, and continue lower with speed without any retracements at all. This is what this was, in my opinion. If we are correct, then the market is going to move lower towards this. And because we're trading before, I do not believe that this touched the lower quadrant. I believe it is around here, if I'm not mistaken. I'm just eyeballing it right now. Because we fell short of the upper quadrant, next time we're going to go there. I believe we're going to go close below this 15-minute SIBI or BISI inversion gap and trade lower into this. So right now, in terms of the hourly chart, a new candlestick open right here. And if I'm correct, the market should just go down with speed if we're trading within an expansion. And the PD ratio which I'm looking for, if I would have still an ongoing position, number one is I would be break even. Number two is this one, and this one, which also correlates with the upper quadrant and the high of this inversion gap, which also correlates with my break-even point. So again, you can see how this beautifully correlates. This is a proportion block also, an order block that comes back into an order block. You can see expansion lower. So this could have been seen, or this could be seen as a breakaway gap, but if the market wants to use it based on this dealing range, then this should be a premium level in which the market should expand lower from. Let me see how the 1 hour chart looks like. 15. Inside of my bearish narrative, I would have preferred for the market to close below the consequent encouragement, and I currently do not like the fact that we've created these lows right here because they are prone to retracing back if the market is just going to consolidate within this range now. But if we're going to continue the expansion, I would want to see the upper quadrant being used, or again an immediate rebalance, which also correlates with the third PD array here. But if it fails, then I'm content with this short little tape reading short, and we're looking forward for the opposing liquidity if the market is going to want to do that. This would be the point in which if the market closed above, then I would be out if I had one more contract or multiple contracts on. I like the closure of this candlestick. I would want to see this being closed below right now. I like the fact that we only went to the 25%. And I would not want to see any level of support here inside of this busy, nor inside of this auto block. And also the upper quadrant of this. And if the market is willing to do that, then this is a swing high instead of a CB. Beautifully. I want to see the market close below this. And if the market closes below the consequent encroachment of this 50-minute inversion gap, then the next candlestick should open, use this as a resistance, going lower below this lows, and I would only want to see it as high. Beautiful signature here. I would only want to see it as high as this consequent encroachment. If it does so, then it means that we shouldn't go higher into the upper quadrant, which means that this should be left as a breakaway gap. So you can see right now how I anticipate these to stay open if the market is willing to do my narrative, of course. But this is a beautiful sign of weakness. The market opening below the mid threshold of this. Okay, deviating this range. If we're looking at this -1, I would want to see a closure below it now. If you're looking at the -1 and the -1.5, between them, I believe this is the 25% if I'm not mistaken. 50, we fell short of that. 25% and the -1.5. But the bodies stay relatively in close proximity to this. Immediate rebalance here, 25% of this tail, and coming back into this volume imbalance. So if the market wants to run for the lower quadrant, I want to see the market go lower its speed and close below this 50-minute CB. And again, third PD array, my stop would be here. Never failed currently. So this should be seen right now as CB rebalance. So if the market goes above this, then I want to be out. I would want this to go lower now with speed, below the consequent encroachment of this tail, and close below it, and not even retrace back into it. Beautiful. It's like they're listening to me. Breakaway gap, sign of weakness, 25% of the wick. Closing lower, as I've told you, no sign of support. Opening below this, which is a big sign of weakness, which we also close below the consequent encroachment. So this means that this is going to be left open because we do not want to see the market go neither here or we close below that. We want to see that being used as a means of resistance. 25% here or 75% rejecting that lower breakaway gap because we do not want to see the market go here. And we delivered again this level of sell side beautifully. And we should see a continuation of the market lower if that 1 hour narrative is correct. This should be an intermediate term high. Closing below the -2, I would want to see this as resistance correlated with the lower quadrant and the inversion gap low. And if I was to trade this, my stop would be above the consequent encroachment of this here because of everything that I have stated. This should be left open. So we got 1, the second, and the mean threshold again is the third. So what's above that? Exactly as I've stated, my stop loss and the upper quadrant of this SIBI. So for a breakaway gap, if we're going to look at a breakaway gap, we want to see in this bearish case the upper half being left open. So a breakaway gap is still a breakaway gap if the market comes back into it, into its low on our bearish stance, 25% and as high as the 50%. If the upper half is left intact, that is still a breakaway gap. You can see how beautifully everything correlates, like the breakaway gap rule sets, the stop placement with the 3 PD arrays, the closing below the consequent encroachment with the breakaway gap, and of course everything comes with backtesting, everything comes with experience, and everything comes with just focusing on a model, like you have stated beautifully within the past session that we've had. I'm also looking at this mitigation block here in correlation with the 25% of this. I'm looking at the lower quadrant of this mitigation block along with the 50%. But my standard PD arrays, again, this one, and mean threshold this. I would prefer for the market to fall short of this consequent encroachment now. If we are weak, again, order block, I want to see the market close below the 75% of it. I want to see no rejection inside of this order block now, as we did with these ones. Here. And also here. And if the market is staying like this and it's not going to trade higher, we fell short of this CB as well, which would be a sign of weakness. That the market is not even willing to get back into that. So let's see. Close below that. Also a very small BISI which can be used as resistance going lower. And if I'm looking at this as a big order block, I would want to see the market close below its mean threshold. This is if we are correct, and I would want to see that, but I would be concerned about this high right now, as we've just created only swing lows and swing lows and swing lows. But if I'm looking at this and this movement has not been materialized yet, then I see this right now as a future order block. And this order block is created when the market trades below its low. But until we get below its low, then we should close below the mean threshold, which means that if we close below that, then we're going to go into the 25%. And if we're going to close below 25%, then that is when the order block is going to be created. But I want to see the market close below the 50%, use that as a means of resistance, which is also correlated with this new order block, and being sent lower. So this low forms the order block. Before we trade into it, I want to see the market close below its future or current 50%. I like the fact that we close below this here, the 25%. So if we go here, we should close below it with speed. And not only the mean threshold, but also exactly, yes, 25%. I don't like this type of rejection. Looking at the 50%, this is where my stop would be. I would want to see this just as a buy stop rate. And this is a future intermediate term high here. So I'm looking here. Fair value gap low, 50%. If the market creates this swing high here, this is a sign of weakness, as we've only touched the 25% and we fell short of the consequent encouragement. I would prefer for the market to remain below the consequent encouragement of this 50-minute CB with these bodies, which we did not do. Instead of this candlestick, if I'm looking for this to be the third candlestick of a swing high, so this is the first, second, and the third, I'm looking at the consequent encouragement of this. The last idea for this trade, if I had something on, would be for this right now to be the third candlestick of a swing high. So going above this is the first. I said the third. First, second, the second, and then the third here. So this is where my stop would be. In the idea that this is a breakaway gap. And in the idea that we've already taken something off. So the first, second, this should be the third. It should either go to 25% or not even go there at all and just expand lower right now. This should not provide any type of support. This should fail. And most importantly, if this fails, then everything will just be very bearish. But given that we've had a lot of swing highs being created, it is normal for the market to want to take some form of liquidity. But I would prefer for this to be taken as a means of a buy stop trade. Stop is here. And we would be out at better than break even.